this is Raman Gill. Welcome to episode 69 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a range-bound market. Usually when there's been a big news or something big in the market and the market reacts to that level, after that we normally tend to see ranges. Price tends to get stuck in this range in between two levels and is not able to get out of that. So once we see such a market condition, how do we actually take a trade? And this is exactly what we'll cover in this episode. So let's go on to the charts and look at what a range-bound market looks like. How do we take a trade based on this information, where to place your stop loss, and how do we exit the trade with a profit? Here we are looking at a range-bound market. This is New Zealand US dollar 4-hour chart. As we can see here, we had a nice price drop here. Price fell down very quickly, and then from there on, market just goes sideways. So it becomes range bound. And as you can see, we can draw our resistance line up top here where the price is not able to break this level, and at the bottom here, as we can see, price is holding this previous support and resistance level here as well. So between these two points is our range. So we have resistance up top and support in the bottom, and price seems to be going back and forth between these two levels. Now, how do we trade this market? There are two trades that we can take when a market goes range bound. The first one is to sell at the top, and second one is buying at the bottom. So let's take a look at this. I have marked two of these trades here. However, you can have multiple opportunities to buy and sell depending on how many days the market stays in a range or over what period of time the market stays range bound. So in this case here, once we establish this resistance level, as we can see, prices come down and now it goes and tests this level, and then this is 4 hours, so multiple 4 hours here, price actually closes below this level. So there is actually another trade here as well. We could sell at this level, stop would go above here, and then we basically would be looking for price to come to this support and resistance area and close that trade out. So I haven't marked that one. So let's take a look at the ones that I have marked. Here in the bottom of the range, we have the support level here. And here, as we can see, there's a reversal pattern. This is a morning star pattern. When we get a morning star pattern, this usually suggests that the price is going to rise now. It's like think of the sun. Price rises after a morning star pattern. So once we get this morning star pattern, we could take an entry. So now this is a 4-hour candle, so fairly big candle. I will look for a bit of a pullback before entering this trade. We do not get a 50% pullback, but we do get some pullback. So we would enter the trade on a pullback. You can go to a lower time frame chart to look for those pullbacks and then enter the trade long. So we go in this trade long and our stop goes below this support level, because sometimes price could just do a bit of a stop hunt and then go back up. So we have to be mindful of that. So the stop has some room here below our support level. So once we get in the trade, we stay in the trade, and the idea is that the price will go back into the top of the range. And as we can see here, price goes all the way back, and then we get a pin bar at the top here. Once we get a pin bar, this is a reversal signal in the opposite direction, so we would exit the trade. From entry to exit here, we have 72 pips in the trade. And now this bearish pin bar is also our entry signal to go in the opposite direction. So in a range-bound market, price goes back and forth between resistance and support. So now that we are at the resistance level, we do have a pin bar. This is where we'll enter a trade short now, looking for price to move down. Once we see this pin bar, we can enter our trade short. Again, the stop would have to go above the pin here. And ideally, I would look for our resistance level over here as well, and maybe hide the stop behind that, just to make sure that we don't get stopped out for no reason and the market pulls back in. So once we have the pin bar, we enter the trade short and we stay in the trade until it comes to the bottom of the range here. In this case, it did go and test the high once again, and if you were trailing your stop, you would have been taken out of the trade. But even if you weren't, we are looking for this level to be our resistance level, and as you can see, price is respecting this level and then drops again, and our take profit would be closer to the other end here, to our support line, because we know that price hasn't been able to break this support. So we exit our trade here. In this case, we get 92 pips in our trade. And as you can see, after that, at some point, the range would have to break. The price doesn't stay in range forever. It would break out. What we do not know while the price is in a range is which direction it's going to break out. And that's why it's important that we exit our trade at the bottom of the range, or when we are placing our targets, we are a few pips before we hit our support level or before we hit our resistance level. That way we make sure that we exit the trade. At this point, we just leave the trade alone, and we would be looking for a level to go up. But in this case, as we can see, price is broken below the range now. So this would not be a trade opportunity for us. We would just step aside and wait for price to show us what it's going to do. In this case, it closes below the range and then drops from. So it breaks out of the range to the downside, which is our continuation of the previous trend here. So that's a different trade setup. But in terms of trading a range, we are looking for selling opportunities at the top of the range, and we are looking for buying opportunities at the bottom of the range. And we are basically just looking for price to go back and forth until such time that price breaks out of the range. So in this case, the total of just these two trades, we have 72 plus 92, 160 pips in the trade, or $1,640 if trading one standard lot.
I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders, we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people, I find, do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets? How do the interest rate decisions impact the market? We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies. And we'll also take a look at carry trades. So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you would like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Thank you so much for joining me today. If you like this episode, please like, comment, and subscribe below. As always, it was a pleasure sharing these trades with you, and I will see you on the next episode.